Ladies and gentlemen, good day and welcome to the IIFL Securities Limited Q2 FY2024 conference call. As a reminder, all participant lines will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Now hand the conference over to R. Venkataraman. Thank you, and over to you, sir.
Thank you, and good afternoon, everybody. Welcome to the Q2 FY24 analyst call for IIFL Securities. The global economy has proven to be more resilient than what was expected, but outlook continues to remain weak. Most organizations, global think tanks, continue to say that Asia is a driver, with India leading the way. India's macroeconomic situation continues to remain sanguine. However, geopolitics continues to cast its shadow. Earlier we had Ukraine and Russia, now we have Israel and Hamas. That is one dark cloud in the horizon which refuses to go away. Coming to our business, we are optimistic about the India growth story. We are optimistic of capitalizing on the India growth story, and we continue to make investments in talent technology to make sure that we fortify our competitive positioning. We have put a good performance in Q2 with all business segments gaining more traction. Our investment banking especially completed 17 transactions, including one M&A transaction. Deal pipeline and outlook remains strong. Specifically to September 30 results, consolidated revenues for the quarter 534 crores, up 65% year-on-year, 50% quarter-on-quarter. The reason for this year-on-year change is because of brokerage income that has risen 66%, 271 crores versus 163 crores for Q2 FY23. Distribution of financial product distribution increased by 57%, 85 crores in Q2 FY24 versus 54 crores in Q2 FY23 due to sale of high-yield products like AIF, PMS, health, wellness, and insurance. Investment banking is also increased 52%, 58 crores versus 25 crores in Q2 FY23. On a quarter-on-quarter basis, again brokerage income has increased 271 versus 177, and that was primarily driven by large transactions in institutional broking. FPD income was flat, 85 versus 85, and investment banking has reduced 38 against 55 in the first quarter FY24. Other income has increased significantly, which you can see to 27 crores, primarily due to mark-to-market gain on in BSE shares. Coming to expenses, employee cost has increased 31% quarter-on-quarter, 43% year-on-year, and mainly because of bonus provision for institutional broking and banking business. Finance cost was up 44% quarter-on-quarter, 58% year-on-year because of increase in our borrowing lines and borrowing limits, primarily because of growth of MTF as well as margin requirements. Admin cost has increased 22% quarter-on-quarter, 78% year-on-year, mainly because of increase in sub-brokerage pass-out, legal and professional expenses, technology and provisions. Marketing expenses also increased because of increased activity and sale of live-long wellness products. Our assets under management and custody stood at 1,69,822 crores. Our average daily turnover was 2,49,993, which is broadly 2,50,000 crores. Broken into 2,445 in cash and 2,47,533 in derivatives. Corresponding figure for the last quarter was 2,30,000 crores, 1,655 in cash, and 2,29,161 in the derivative segment. We have 4.23 lakhs active customers in NSE, and as we have already told earlier, our pace of customer acquisition has slowed down. We have acquired about 50,000 customers in a quarter, and primarily because we want to focus on the section which is affluent. With this, I come to the end of my talk, and we are more than happy to answer any question that you want. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions, press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, wait for a moment while the question queue assembles. To ask questions, please press star and one. The first question is from the line of Narendra from RoboCap. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on the set of numbers.
Thank you.
So my first question. Am I audible?
Yes, you are audible.
So my first question is regarding your average daily turnover. So, it has seen a drastic increase over the past quarter also and over the past year also. So what do you think, how much of it is sustainable and what is your outlook for the next couple of years?
Okay. This is a question for which it is very difficult to give a very scientific answer, but let me try and articulate my thoughts to the best of my ability. So if you see the exchange turnover, then bulk of the volume is happening in options. And within options also now there's a big stake, I would say players who have come in the, what I call as the algo trading platforms. And, in the past, our algo offerings were not very strong. And in the last 2 quarters, we have made significant investments in our algo platforms, and hopefully we are able to see some benefits of that. So these are the typical customers who are what we call as high volume customers who keep on trading aggressively in the options segment. This is one segment which we continue to, I would say, invest and acquire customers who trade options significantly. But having said that, this is one segment which is very competitive and customers leave for lower and lower brokerages. And this brokerage there's a race to bottom happening. So it is very difficult to say how much of this growth will happen going ahead also. And as I said, that our agenda is to focus more on the affluent segment and make sure that we get to quote unquote a financial planning model so that we try to increase our cash segment and try selling more and more of financial products.
Okay. And what kind of pipeline are you seeing in the investment banking business? So what kind of growth will we see in the next couple of years?
See, we are very very optimistic about our investment banking business, and this is one business we have done. We have continued to invest and fortify in the last 5, 6, 7 years. And given the fact that India is in a macroeconomically speaking, India is in a sweet spot, and as the economy recovers and capex cycle starts, then there will be a big opportunity in the small and mid cap space, especially in the ECM segment. And there, I think our positioning is quite strong. And the reason for our strong positioning is threefold. I would say one, we have a very good research. We have good corporate contacts. And third, last but not the least, is that all the 3 buckets of the IPO construct we are able to pull on the we are able to fulfill on our own strength. Deal pipeline is also good, and I think overall I'm optimistic about it. Although it's very difficult for me to give a number. Last 2 quarters have been good because we saw actual closure of transactions, and so this is lumpy income, and as and when transactions get closed, it will come. But overall, directionally speaking, we are very optimistic.
Okay. And one question regarding the BSE has launched its option derivatives segment. So are you seeing any kind of traction over there? Has it also contributed a little bit to the
Yes. Actually, that's a very valid point you have raised. BSE has started Sensex options, and also so they have also benefited from that. So yes.
Okay. So we are seeing humongous growth there.
Yes, we are seeing growth there. Yes.
Right. Okay. And my final question would be ballpark growth that if you could give on your top line and your margins if it's possible for the next, say, couple of years.
This is something which is very difficult for me to hazard, and also forward-looking statements are generally difficult to make. So I would skip this question if you don't mind.
Okay. So overall, we are optimistic about the growth, right? I mean, because one of the brokers I attended, he said that the next couple of months or next couple of quarters could be a little bit down due to the elections and stuff. So are we on the same lines or we are more optimistic?
Actually, I'll answer that question very differently. What happens is that it is very difficult to give a quarter-on-quarter outlook. And because obviously our business, which is capital market linked, is quite, I would say, quite linked to the state of the market, for lack of a better word. So my suggestion is that don't look on a quarter-on-quarter basis, but look on a longer trend. So longer trend, all the indicators for our business are with, simply because I would say, economy will move from say 3.5 trillion to 7 trillion. The total amount of assets in the mutual fund will increase, life insurance penetration will increase, and I would say sale of EMS and AIF products will increase, number of demat account holders will increase, and people, I would think that financialization of savings is also a real trend. So, given these factors, I would say look at a longer or maybe a year-on-year or a larger time frame, because shorter time frames tend to distort the picture.
Okay. So one question, what are our top focuses? I mean, what are the top segments that we are focusing on the medium term?
So I would answer that question differently. We have three segments we are targeting. One is institutional broking, where our team is continuing to do well. We are known for our research. Investment banking, again, in the mid-market space, we are trying to build capacity. And last but not the least is, I would say, instead of derivatives broking or chasing market share broking, we were more focused on the financial planning or the affluent segment.
Okay, thank you so much.
Thank you so much.
Thank you. Before we get to the question, a reminder to all participants, you may press star and 1 to join the queue. The next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Hello, good afternoon. How are you?
All well, Prayesh. How are you? Good to see you.
I'm good, sir. Firstly, on this, the option volumes, when we talk to investors, I think there are two concerns which are always cited and would seek your, responses to those concerns. One is whether we have reached the threshold. What would be the best way to tell whether the option volumes can continue to rise from here, from the levels that we've already seen, whether it could go up or down. We've always seen option volumes in the last 3-4 years heading not bad in a few months where we would have seen some positive trends. So, how do we kind of take this call whether the option volumes will continue to see a upward trajectory? Second is whether, how, the activity of these customers, especially like discount couples who have acquired very young customers in the lower tier fees with a very lower size. What kind of behavior would these customers entail in case of a bear market phase? Possibly, I'll just add one more is, the regulator, whether the regulator will intervene and kind of restrict retail activity participation in that kind of market. I would like the responses to these three concerns and whether these are any real concerns for the industry.
Prayesh, it's a very complicated and I would say very interesting question. And I'll give you my perspective in the sense that I always thought that when derivatives volume became 90 and cash segment became 10, I thought this was the peak. Then 90 became 95.5. Then 95.5 became 95, 99.1. Now 99.5, 99.6 to 0.4. So this entire growth of derivatives has I would say, for a lack of a better, surprised me because the way this entire growth has happened has really caught people by surprise. And even if you look at the options volume, the bulk of the volume is also happening in Nifty. Now, Sensex has come, again, it has formed a new, I would say, Nifty, Bank Nifty, Fin Nifty, then you have Sensex, Bank and all these things. So these are the, I would say, triggers which are happening, and then we are ordering what is called as the mini lots also. I think Axis Bank Mutual Fund has written a report which is called Gamification of India. So, and they have raised some real concerns in the sense that people are looking at this as more like I would say, a game rather than serious investment. So this growth is happening for sure, and more new people are coming and trading options. So this is a trend. So I'm sure that regulator will look into it and whatever unhealthy practices are there. So on that, I think it's for the regulator to decide. But my guess is that, frankly speaking, every time I call, in the analyst call, you ask me this question, I think ab ho gaya. and I'm like proven wrong. So this is something which I would now decide not to opine or give any opinion.
Okay. Interesting. So secondly, on, your kind of acquisition strategy now, like you spoke that, we will be focusing on affluent client acquisition. What are the channels of these acquisitions, clients, and how do we see this further scaling up from here? Whether, what, so if you could just give some numbers as to, on the acquisitions that you would have made in the first half, where are these customers from, lower tier cities, what age cohorts these are from? And what income cohorts these are from.
So I don't have these questions like age and income codes, but reality is that we have 2-3 channels to acquire. One, we have a sub-broker channel from which we are acquiring, and we have our own RM list to acquire, and the pace of acquisition is slow. So this is not something where I can talk saying that I'm going to acquire lakhs and lakhs of customers. So we are more focused, as you said, on the affluent segment and the quality of customer rather than getting customer for the sake of customer, and that's the process. So this as we said, we have articulated this strategy sometime 2-3 quarters ago, and hopefully over a bit time we'll gain traction.
And recently we had seen, one of the traditional brokers, which is bank-based brokers, HDFC in particular, they have launched a proposition for a discount broker. While I understand we also have a group entity which is IIFL. Is that the strategy that everything will go to 5% of the discount booking, and IIFL Securities will be primarily running in the traditional format and looking at the different business? Is that the right?
Sorry, can you repeat this question because I missed you?
No. So basically what happened was IIFL Securities, they recently launched a app, a discount broking model, where, they would be focusing on, they will basically competing against Upstocks, those kind of companies. But we already have a group company called Concall, which will be, so that approach will continue to be in that form. The discount broking will be in the pipeline, and the main business will be, or the traditional broking business will continue to be in the IIFL Securities. This is the right. That will continue.
Yes, we are very clear that this the no touch, tech-savvy, do-it-yourself customer will be focused on IIFL. This is more like financial planning kind of customer, where there is human intervention and human assistance. Because the cost to serve for a human, we need to target a more affluent customer.
Okay. So last question on our distribution side, where would the focus be? Whether you would, because in life insurance, we've seen there are some changes in the taxation rates, where which has impacted some business, and one of the operators has a very muted performance in life insurance. And even for you guys, I think the life insurance business was kind of muted in this year. Yeah. So, which products?
Actually, our focus on this segment will be all products: PMS, AIF, mutual fund, bonds, insurance, general insurance, wellness. So we are focused on that. And my opinion is that because of tax changes, this has been affected, but over a time people get adjusted and become normalized. So my feeling is that because everybody had a bumper fourth quarter, so now people are for lack of a better word, I would say, going slow. But too soon it will catch up. So it will be all kind of advisory products.
Okay. And so lastly, your take on the NCX transition, whether for us it has been smooth, and whether are we facing any issues with regards to the transition which has happened, just yesterday. Are we facing any challenges or is this all the transition?
Actually, to answer your question, there were teething problems, but more or less smooth. But I think it's like a issue. It's a non-issue because the transformation has happened.
Okay. Great, sir. Thank you so much. And all.
Thank you so much.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. The next question is from the line of Sudhir Shankar, an individual investor. Please go ahead.
Thank you for providing me the opportunity. Congratulations for good number. I wanted to know the current cash market share, derivatives, and commodities market share. And my second question is also the trading for the cash and derivatives. And my second question will be regarding MTF. How much percentage of MTF is outsourced?
It's out. No, I didn't understand last question. MTF is outsourced.
I mean, your MTF book size is around 895 crores. So
Yes.
895, how much it is outsourced?
So as per regulator, we can do 50% from own fund and 50% from the borrowed fund.
Wait, what is the question? Out?
Outsourced. I mean, how much it is, how much of the MTF is taken from bank, like.
How
How do we fund it? Okay, that funding is 50% own and 50% borrowed amount. And as you know, our own balance sheet is about 1,300 crores, so that we can manage. And coming to market share, I would say 1 second. Yeah, no? Cash market share is approximately 3%. F&O market share is about 0.8%. But there we have taken the total divided by total. We have not separated retail and stock. Denominator is total exchange volume. And commodity is about 0.5.
Okay. And what is the sharing of derivatives in total brokerage? Derivative cash and derivatives sharing?
Okay, cash will be about 60-40. 40 cash, 60 derivative.
I have one general question regarding the derivatives point. So, currently the derivatives retention is very important for this. So what can be the two reasons so that the retention can be increased? And also the client can make few loss, like because the client is the client accounts are blowing up and heavy margin losses they are facing. So what client should do, and also for retention of the company, what are the two main reasons which can help?
My guess is that, first of all, the client should become more educated and know about how to trade options rather than coming and doing what I call as quote unquote blind fatta or I would say just Hello India Kilo. So client has to be educated. The second thing is that now there are a lot of, so basically you should put stop loss or be careful. And second thing is to increase here. We as a broker, we spend a lot of time and energy educating customers and telling people that derivatives are sophisticated people. It's better to put money in mutual fund and cash segment, take delivery and hold for the long term. Because the entire option is for 1 month only. And in 1 month the market can go anywhere. So my guess is that so people trade, learn, make mistakes, learn, and then become, I would say, more intelligent investor.
Yeah, all right, sir. Thank you for giving the insight answer. Thank you.
Thank you so much.
Thank you. Participants who wish to ask questions, please press star and 1. The next question is from Mahesh Awake from Podar Diamonds Private Limited. Please go ahead.
Hi, thank you for this opportunity and congrats on good sets of numbers. Just going forward that we are actually growing on top line and bottom line. So going for next 2 to 3 years horizon, are we going to maintain the same trend first of all, and whether these margins will be maintained going ahead?
Sorry, I think going forward on a 3-year forward, I think growth trend should continue. Although, as I said earlier, also difficult to predict on a quarter-on-quarter basis. So, given the overall, I would say quote unquote the trend in the financial because of financial savings overall trend, I'm quite optimistic. Regarding margin, I think we should be able to protect the margin.
Fine. There's also increase in employee costs and finance costs this quarter.
Employee cost has increased because of bonus provision. Finance cost has increased because of borrowings has increased as the margin trading book has increased.
Yeah, but any plans for going forward to get out of this debt burden?
If you look at our debt now, our debt is not a quote unquote debt burden because as the margin trading book comes down, debt will reduce, and as the exchange and other component of usage of fund is because of exchange margins. Because of tightening of SEBI regulations, our funds are getting blocked in exchange. So these are two uses of capital. So theoretically speaking, we have not borrowed and put money in plant and machinery to that extent. So effectively, they are useful. They are just working capital and it's back fast.
Thank you.
Thank you.
Thank you. A reminder to participants that you press star and one to ask questions. The next question is from Varun from Abacus Asset Managers. Please go ahead.
Hello.
Yes.
Hello. Yeah. Hi, sir. Just one question. Why is the other income so high, 36 crore as compared to...
Other income is very high because of mark-to-market gain in BSE shares. As you know, we are having BSE shares in our investment, so that it had a mark-to-market gain.
Okay. Got it. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Satya from J&J Holdings. Please go ahead.
Thank you so much for this opportunity.
Thank you.
What is the status of basically the 5 paisa transaction, and when do we expect the shares?
See, actually, this to be 5 paisa transaction is pending for regulatory approval. We have been, I think NSE, BSE, SEBI is asking queries, and we have answered all the queries. So hopefully we should get the approval.
Okay. And seeing our cash flows and the requirement of cash, basically, is there any thought process of doing a buyback and basically rewarding the shareholders as well as the promoters, basically? Is there any thought process on that?
You know, the board will decide on this at an opportune time. And as of now, it is not proper for me to comment on that. So I would guess is that depending on what the full year looks like, the board will decide. But having said that, I think we should be cognizant of the fact that because of new regulations, margin requirements have gone up. So we might like to retain cash so that it can fund its exchange margins as the business grows, as well as margin trading book. It has to be a balanced decision, and I would guess the board will take a call.
Okay. And last question from my side. Is there any, basically that real estate sale which was going to happen or which was planned?
Yeah, last quarter we sold one property in Ahmedabad.
And basically going forward by this year end, any targets of?
Actually, I made this comment in the call also, so I don't want to repeat it. We are trying to sell. And as and when we get a good deal, we'll exit.
Thank you so much. Thank you.
Thank you so much.
Thank you. To ask questions, please press star and one on your touchtone telephone. The next question is from Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah. So on this upstreaming of funds to the clearing corporation, did we have any impact on additional interest costs when we had to replace bank guarantees with some borrowings?
Sorry, what?
This upstreaming of funds to clearing corporation, bank guarantee was removed, right? And the bank guarantees, the mutual funds, which was over and mutual funds back then could have been placed. I think one of the speakers has kind of stated that they would have an additional burden of an interest cost because of this. So whether we are taking any issues?
No. So basically, exchanges are taking fixed deposit and overnight mutual funds. And only the working capital requirement is put in the form of cash.
Okay.
Yeah. Bank guarantee was anyway allowed, but you have to now get it from your own funds. There is nothing linkage with upstreaming of funds with bank guarantee.
Okay. Got that. And secondly, on the mutual fund side, we've seen a sit count to be kind of, plateauing in the last 2 years. Is mutual fund distribution facing some challenges because we are focusing on other products? And secondly, also on this, specifically whether because in the affluent category, there is more shift towards AIF and PMS, and for the reason the mutual fund AUM or mutual fund count or the PO count is not in line.
No, actually, to be honest, we are focusing on mutual fund. Yes, you are right that we are not seeing significant traction. 1 year ago, it was 100,000. Now it's at 160,000. So obviously, growth could have been bigger, but it's not been so much. And mutual fund assets are at about 9,000 crores. So we will continue to grow this.
Oh, all right. Thank you.
Thank you.
Thank you. Participants who wish to ask questions, please press star and 1. The next question is from Sumit Jankar, who's an individual investor. Go ahead.
Thank you for providing the opportunity. So my question is regarding the algo trading. You mentioned about the algo trading. So how much is the growth, quarter-on-quarter growth in turnover? And
I don't have this exact data on how quarter-on-quarter growth of algo has taken place, but it has grown.
Okay. Do you have numbers of market share of algo?
No, I don't have market share of algo.
Okay. Thank you.
Thank you.
Thank you.
So if there are no more questions, can we end it or?
Yes, sir. This was the last question in queue.
Okay, sir. Thank you. Dear friends, thank you so much for joining the analyst call. If you have any other questions, you can ask either, you can send an email to our investor relations and we'll answer. We'll be more than happy to answer. Thank you so much once again and have a nice day.
Thank you very much. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.
Thank you.